All right, good morning. We open here in about 15-20 minutes. Futures are pointing downward again. The move Friday was typical bear market action. Remember, in bear markets, Fridays, you get a lot of these snapback covers after a big, long week down, which we were down about 10% for the week. We were hanging around 666 on the SPOOs Friday when everybody decided to cover at the same time in the last 15 minutes of cash action, which is a half hour of the SPOOs, and they took them up to about 688. So a nice little snapback rally. But the interesting point about that 684, 688 area was that was the breakdown area for the morning. So we just rallied to where the action had broken down in the first half hour of the day. So again, it was totally technical, and today we're right back to where we were pretty much on the on those lower parts of the day. We're trading about 672, 674 right now. We've sold off all night. They couldn't get them open. They gapped up a little bit, 692 as they opened Sunday for the Japanese sessions, and then just have sold off since midnight Pacific here on the West Coast. So again, we're trading right around 674. The pivot is about 689, and everything is pointing down. Merck took over Shearing Plow this morning. You got the stem cell stocks up on talk that Obama's going to reverse everything that Bush did. Same old there. Those stocks only move on rumor of news. And more importantly here, it's a trader's market. It's going to continue to be. And if you're not learning how to trade or know how to trade, and you're still in the buy and fold mindset, just ask your financial advisor, when do you sell next time? Because you've had two times now in the past decade where you've had the S&P up around 1570, and there were moments in there that you should have been selling your portfolio, not holding. So now that you're down 60%, you need to make back Bernie Madoff-esque 8% a year for the next 11 years compounded, just before we're going to get back to where we fell on the highs of the '07 highs. So keep that in mind when you sit down with your financial advisor and they tell you, oh, this is okay, we're allocated, we're ready for the next move. Well, how come he never got you out near the top? And I'd be asking those questions very firmly right now, because now is the time after they've failed twice. That's two times now in a decade. And it is a different market. It's not your mother's buy and hold. It's not your father's buy and hold. It's a whole different world out there, and it's going to only, I think, get more difficult for the buy and hold, and the financial advisors that are out there suggesting you still continue to do this need to think more tactically and put some of that on their plate, a good helping of why. So anyways, that's it. Again, buy and fold allocation is not a model. There has to be timing, when to sell, why to sell. There's need to be risk established. If you are going to buy and hold, how much you're going to risk, and set those limits up front, and sit down with your advisors and figure out there is a way to make money on the downside. There is a way to make money on the upside. Right now we're in a downward trend. I wouldn't be buying stocks until that trend changes. And you can do that individual names, or you can do that market wide. But market wide right now, there's no reason to be buying this market. Peace. Have a good day. Trade them well, and we'll see you later.